I guess we'll just get into it here. So, like you just mentioned, there was some talk about the OSFI getting rid of the qualifying rate. You want to just tell us a bit about what the qualifying rate is and how it's impacted financing for consumers?
Yeah, thanks, Dave. So Ontario the Office of the Superintendent of Financial Institutions, hot off the press today, announced that they're not changing the qualifying rate. So understand that the qualifying rate was always put in to protect Canadians. So you always had to be approved at a higher rate than what you were actually paying, very simply put. So the qualifying rate's not going away. We're going into a bit of a rougher economy. You always will have to be approved at 2% higher than what you're actually paying as what we call your contract rate. And again, hot off the press, it's not changing anytime soon.
Yeah, fair enough. I mean, that made a lot more sense when rates were at 2%. Now that we're up closer to 6%, adding 2 percentage points onto that might seem a little bit overly protective, but you're right. It's put in there to protect buyers and to protect the entire market and the Canadian financial institutions as well. So,
yeah. And sometimes with mortgages as well, you got to remember mortgages are not in a silo, right? There's also car loans, there's lines of credit, and we're coming out of a 10-year stretch where credit was very readily available. You could be unemployed and getting a credit line that's unsecured. So it is a bigger picture issue outside of the mortgage, of course.